Top investors watching your money. Joining me right now is Nicholas Wealth Management President David Nicholas, Payne Capital Management President, and the host of Payne Points of Wealth podcast, Ryan Payne, and Walser Wealth Management President Rebecca Walser. Great to see everybody this morning. Thank you so much for joining me. Rebecca, kicking things off with you. We got a pretty good rebound underway this morning following that sell-off yesterday. Do you buy it? The S&P making its worst day yesterday since May, spurred on by concerns over the debt crisis in China and the property bubble unwinding. Chinese real estate group Evergrande hitting an 11-year low as it approaches a debt payment deadline this Thursday. There are expectations that Beijing is unlikely to bail out this company as other Chinese stocks suffer. There was Cynic, a Chinese property developer, plunging 87% before that stock was halted yesterday as well. Rebecca, the markets came back somewhat by the close yesterday. Oftentimes, the markets like to see a total upset, a huge sell-off. Now, because they came back at the end of the day yesterday, I'm wondering if you think this rally today is sustainable.
I wish I did, Maria, but I unfortunately do think that China is definitely making a turn here. And what we see is the equivalent of a Federal Reserve official over there saying that Evergrande is not too big to fail, and basically indicating they will not bail it out. And this comes on the heels of other bailouts that the Chinese government has actually given to Chinese banks and Chinese corporations. And so what we're starting to see is sort of a reversion away from Western capitalism on the part of Beijing and the CCP, and that is reverberating through their capital markets. The question is it contagion? Is it going to come and reverberate throughout the world? And the answer is, Maria, to that, you know as well as I do, we are completely intertwined with the Chinese economy. Our exports are Chinese for the most part. And yes, Trump's tariffs did have some impact to move some supply chains outside of that. But as the Chinese market goes, we will be severely impacted. It's the same. If we look back at the Great Recession, and we know that the U.S. capital bond market started to fail, a lot of that was a contagion effect across the world, especially Europe, because those people have bought our bonds. And so it's the same. China is a big holder of our debt, not as large as Japan, but they're extremely large. And this reversion away from China supporting its own corporations and allowing certain industries to say, no, you're going to have to actually monitor your credit and don't expect the Chinese government to bail you out forever, that is going to have some kind of effect. And so we have to look and see how deep is this going to go, because if it's the beginning of a great recession for China, it is the beginning of a big problem for the United States.
Yeah, there's a good story in the Journal this morning about China and how Xi Jinping is more inward than any other president of China since Mao Zedong. And in the story, it says that Xinjiang's company, who has been on this program, Soho China, initially was to be sold to the Blackstone Group. But because of the crackdown and because of the pricing, actually, Steve Schwarzman walked away. So Soho China was not sold to the Blackstone Group as we expected. And the property issues are impacting markets across the world. That China property market continues to decline. I'm just wondering if there's a contagion here. And then you've got the Federal Reserve meeting starting today, Ryan. Investors are waiting for clues on the tapering program. You've got weakness coming out of China, perhaps impacting the United States' economy as well. And then you got a Federal Reserve who's looking for windows to start pulling back the stimulus. What are you expecting from this Fed meeting today? And we'll find out what went on at the two-day meeting press conference tomorrow.
Yeah, I think we're not going to get a lot, Maria. I think we're going to get a lot of the same. The real question here is, are they going to stop or taper back on their bond buying, which they may give us an indication that they're going to start thinking about tapering by the end of the year. So that's possible here. I suspect we're going to wait to get that information in the November meeting, only because the unemployment numbers came in relatively weak for August. Now, think about unemployment for September, which could be interesting, is the fact that those benefits, those extra benefits, have gone away. So I suspect that employment, is going to start to heat up, and that might be a reason to start to get an idea when we do taper, which could be, I would say, by the end of the year. The other question is, what's going to happen with interest rates? We have more Fed officials saying that they should be raised, maybe by next year as opposed to 2023. So it'll be interesting to see where Fed officials stand on that front, on that dot plot. Are we going to see more Fed officials looking to raise interest rates sooner than later? But again, I don't think we're going to see much movement just yet. But I think by November, because I'm in the camp that the economy is going to continue to heat up, unemployment is going to continue to come down, and inflation's a bigger problem than the Fed wants you to think. But I think, we're going to see more of that information come out in that November meeting. So I think it's going to be more of the same. The punch bowl's still there. The party's going to continue to go on, and markets are going to continue to go higher. That's my view.
Yeah, unless we get much higher taxes and a capital gains tax that is, 43.4% is what Joe Biden would like to see. Now, look, Ryan, it may very well be that nothing gets done in this economic agenda because now, David, we know that Democrats are planning to attach the debt ceiling and the debt limit to this spending bill. Senate Minority Leader Mitch McConnell says he's not budging, that the Republicans will not vote on any bill that will raise the debt ceiling. This standoff could result in a government shutdown at the end of next week, which I do not think Congress would allow. But this is another gimmick that the Democrats are playing. They can raise the debt ceiling on their own. They're in control of all three branches, and yet they want to attach it to the spending plan to put the Republicans on the hook to raising the debt ceiling. Your thoughts?
Maria, you're exactly right. And I don't think Republicans should fall for that bait. They have the votes. They have the votes to raise the debt limit on their own. If they're going to be a party that is fiscally responsible, then, hey, they need to defend it. So I think it's ridiculous that if Republicans go along with this, they should let Democrats own this. But overall, when you just look at the big picture, I mean, President Biden last week said that wealthy Americans and corporations need to pay their fair share, especially when they're now targeting to try to pay for this $3.5 trillion budget deal that they're coming out with. And I just think that's ridiculous, right? He said that the top 1% evades $160 billion in federal income taxes a year. And I'm like, $160 billion, that's what the federal government spent last week. 60% of Americans don't pay any federal income tax whatsoever. So how is that fair? And I think the one thing the administration is not addressing is really what the hidden taxes, which is inflation. I mean, if you just look at what groceries and commodities have been, if you look at pork's up over 7%, beef's up over 6%, milk's up 6%. I mean, eggs are up over 5%. So Americans their incomes are staying stagnant relative to inflation. And I just think this is going to be an issue for economic growth going forward. But I think Democrats should own the debt ceiling. If they choose to raise that limit, that's on them, and Republicans shouldn't be a part of it.
Well, after all, the Democrats are the ones who want to spend all this money right now, right? I mean, you've got a $5.5 trillion spending plan and all these high taxes that will have to come with it. So we'll see how this plays out. No shortage of division, as usual. David Nichols, Ryan Payne, and Rebecca Walser. Great to see you all. David Nicholas, thank you so much for joining the conversation.